It's time, guys. It's time for the real estate and economic market pulse update for the week of January 23, 2023 from beautiful Las Vegas, Nevada, where it's kind of chilly today. I hope you're nice and warm inside wherever you are. I hope you're having a very wonderful year. I hope you're doing very well. I am Jordan Dove. I am your real estate advisor in Southern Nevada, where we practice residential, commercial, and investment real estate. And if you need an agent here or anywhere in the country, I can get you with a quality professional that will treat you with the utmost respect and care as I do for my clients. My contact information can be found in the description of this video. So if you ever have any questions or if there's anything I can ever do for you, save my number in your phone and give me a call or shoot me a text, all right? And now, in about 10 minutes, you are going to know more about the real estate market and economy than 90% of your peers. And I want to give you guys a quote from my first mentor. He always told me, if it doesn't move you forward, move on. We all need to be doing things that move us towards our goals and our plans. And if it does not do that and move you forward towards your goal and plans, just move on. And to piggyback on that just a little bit, if you set yourself a goal, a plan, a dream, and you are still working towards that and you haven't given up yet, you are a savage. You're a savage. Keep doing it. Don't give up. Keep going and chasing your dreams and your goals. Set out a plan of action to do that. All the tasks you need to do. Manage your time and keep going for it because you will get there. All right? So let's review what happened last week and go over some economic notes. And then we are going to get into our national housing update. So make sure that you guys stay for that. There's some good information here. All right? So into our economic updates and our review of last week. After we had a strong start to the year in the stock market, some traders decided to take money off the table and cash in gains, which sent the S&P and the Dow down, although the tech-heavy NASDAQ remained positive last week. There were also a few concerns about economic growth and rate hikes. These were spiked by weak December retail sales and manufacturing data, plus the Fed's Beige Book forecasting little growth going forward. But there was some welcoming news, and it came as December's Producer Price Index, or the PPI, reported a slowdown in wholesale price inflation. We also saw initial weekly jobless claims drop to their lowest level since late September. Last week ended with the Dow Jones Industrial Average down 2.7%, the S&P 500 down 0.7%, and the NASDAQ was up 60 basis points or 0.6%. Bond prices barely moved for the week, although the UMBS 5.5% slipped 4 cents to $101.11. The national average 30-year fixed mortgage rate headed down again. Good news for buyers in Freddie Mac's primary mortgage market survey. But guys, you have to remember that mortgage rates can be extremely volatile. So check with your mortgage professional for up-to-the-date information. I know a guy, his name's Chuck Barone. Check out his YouTube channel. All right, let's get into some more economic notes that I think you need to know. And that is that wholesale prices fell 0.5% in December. And that was more than expected as the retail sales fell. The PPI declined 0.5% for the month, and that was compared to the Dow Jones estimate for a 0.1% decrease. So we had a 500% decrease compared to what they thought it was going to be. But there was a sharp drop in energy prices, which helped bring down the headline inflation reading for the month. The PPI's final demand energy index plunged 7.9%. Retail sales fell 1.1% in December, and that's slightly more than the 1% forecast. Consumer prices fell 0.1% in December, and that was in line with expectations from economists. The Consumer Price Index, or the CPI, fell 0.1% in December, which met expectations for the biggest drop since April of 2020. Now, excluding food and energy, core CPI rose 0.3%. That was also in line with estimates. And on an annual basis, headline CPI rose 6.5%, while core increased 5.7%. And the biggest reason for the easing in inflation, it came from a sharp drop in gasoline prices, which are now lower on a year-over-year basis. I want to know what the average price per gallon of unleaded gas is in your area. Let me know in the comments. Out here in Vegas, we're around $3.90 a gallon for unleaded 87. Anyways, you know we love our treasury bond yields, and we closely watch the 10-year treasury yield because in the real estate business, mortgage rates closely correlate with what the 10-year yield is doing. That goes up, rates go up. That goes down, rates go down. And we are still inverted with the 2-year trumping the 5, 10, and 30, with the 2-year up from last week's reading to 4.232%, the 5-year at 3.622%, and the important 10-year yield lower than the 5 and 2 at 3.521%, but the 30-year is higher than the 10, so we don't have a complete inversion, and that's currently sitting at 3.686%. So now you know what's going on in the economy. It's time to talk about the national housing market update. If you like this video, this kind of information, hit that like button and subscribe if you're not already. Please hit the little bell icon so you can get notifications when new videos are posted. Hope you guys are doing great. Let's get into our existing home sales, all right? They slipped in December, and that was blamed on falling affordability. But the National Association of Realtors noted, expect sales to pick up again soon since mortgage rates have markedly declined after peaking late last year. Existing home sales faded for the 11th straight month to a seasonally adjusted annual rate of 4.02 million. Sales waned 1.5% from November and 34% from 1 year ago when money was much cheaper. The median existing home sales price climbed 2.3% from the previous year to $366,900. Again, that is the median existing home sales price for 2022. National average, that was up 2.3% from the previous year to $366,900. What are prices like in your area? Let me know. I want to hear where you're from and what prices are like, all right? Now, existing home sales totaled 5.03 million in 2022. That's down 17.8% from 2021, as last year's rapidly escalating interest rate environment weighed on the residential real estate market. Housing starts dipped a tick overall too, yet it was due to multifamilies. Single-family starts rose for the first time in 4 months, scoring the biggest monthly percentage gain in more than 1 year. But permits did fall a little bit, but the builders do have their hands full with homes under construction at the highest level going back to 1970. And with the recent drop in mortgage rates, home builder sentiment rose for the first time in 13 months. What about that? Little did you know, Freddie Mac's chief economist noted rates are at their lowest level since September of last year, boosting both home buyer demand and home building sentiment. Adding declining rates are providing a much needed boost to the housing market. And a lot of time I don't agree with these economists, but I do right now because I am seeing activity picking up in our market. We are working with several clients, and we've had multiple offer situations on multiple properties that are below the median prices here in the mid 300s to low 400s. I believe that is the sweet spot for affordability at these rates for the middle class and first time home buyers, and I believe we will be seeing activity continue to pick up in those price ranges. Now, luxury and higher end properties are sitting on the market much longer and are having increased price reductions. Also, what we are seeing here in Southern Nevada is continued decreases of inventory since the peak of inventory in October of 2022. In October, we saw 11,344 available properties on the market, and that includes single families, townhomes, condos, manufactured, multifamilies, and high rises. And now we, in that same category, we are down to 8,326 properties. That's a difference. There's 3,018 less properties on the market that are no longer available, and that is a decrease of 26.6% from our October inventory highs since before the pandemic. Okay. Now, our current absorption rate, which is a simple measure of supply and demand, that is currently at 19.42%, and that's down 127 basis points from our last reading on January 9th. We currently have about 5.15 months of inventory and 6 months of inventory. That's considered an even buyers and sellers market. Now, a market with an absorption rate at or above 20%, that's typically called a seller's market, whereas an absorption rate below 15% signals a buyer's market. So this is a figure we check and watch constantly because it gives us a true feel of where the market's at and where it's heading in terms of supply and demand. So that's our market update for today. I hope you guys enjoyed that. If you're looking for an agent, I'm here to help you. My team's here to help you. We have some excellent members and agents on our team to get the job done for whatever you're looking for. If you are looking to make a move anywhere across the country, we can get you guys a referral. If you have any questions, let me know in the comments. I would love to answer them on a future video. I also plan on discussing some more commercial stuff on other days of the week. But this is our economic and national housing market update for the week of January 23rd, 2022. As always, you guys stay blessed. Be healthy. Enjoy the time with your family. My Cowboys lost last night. That damn Dak Prescott cannot take care of the ball. Chuck's Bills lost, so it was a day of mourning here at the office. But anyways, see you guys next time. Take care. Be well, and lots of love.